Are you new to real estate, struggling in real estate, struggling wholesaler, cash buyer, or really you're just looking for better ways to close more deals? You're in the right place. Each week, I pick a random house off the internet, I analyze it for a cash deal and a creative deal. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show. Hey, real quick, if you haven't already done so, hit that like button for me. It helps just boost it out to other people who are interested in real estate investing and looking for better ways. Now, let's dive in. This week on the show, we are in Boulder, Colorado. We had a request for Vail, but there really wasn't anything remotely close to a reasonable price range that we could try to make something work. So I jumped over a little bit to the east and found Boulder, and we're going to break down this property right here. 6239 Willow Lane in Boulder, Colorado. They are asking $479,000. It is a three-bedroom, two bath, a little over 1,400 square feet, and they have been on the market for about 1 year. There's a $524 a month HOA, one car garage, and it was built in '84. So let's dive through these pictures and see what we can find out. Overall, it looks pretty clean. Dated with this thing right here. That is from '84. You got the parquet floor. That's definitely '80s. A little lofted area, kitchen. Definitely dated kitchen. I would be willing to bet those are the original cabinets. Just a fairly nice, simple house. Looks like wood siding. Roof looks to be good. Trex decking. Well, maybe not Trex, but composite wood. Yeah, I think this thing's just really dated. Just needs a good little facelift to bring it into this century. Nothing crazy. I think the paint's good. I would definitely update the cabinets, even if it's something as simple as just painting the cabinets and putting new hardware on it versus replacing everything. Almost like a townhouse condo style. All right, so they got the garage here and then the unit up here. Good angle. All right, so it's nice, but it's dated. So let's see what else this listing is telling us and why has it been on the market for so long. Let under natural light. Well maintained for 30 years. Include a pool. You actually get something for the HOA fee that helps. New electrical panel, new fridge, dishwasher. All right, so there's some new stuff in here, but nothing major. What else? Let's see if property history is going to tell us anything. They started at 530 and now they're down to 480. See if they'll tell us when they bought it. They bought this thing. Wow. They're just not motivated to sell. Hmm. Well, that tells me a lot. Door replacement, electrical work. Oh, some fairly new things in there. Not telling me anything else here. Normally shows more stuff like comparables or anything. So that's not helping us at all. All right, what about how are we going to figure out our ARV or uh, after repair value? Yeah, it's not giving us anything else down here in terms of potential sales, or anything like that. Let's see if we can do this button. Oh, no, that won't work. All right. So we know it's not worth that. And of course, nothing else is saying whether it is. Let's remove that and maybe it'll show us something here. We're just looking for some sort of comparison. All right, so here's a 530. 20. Not finding a how to help this thing out. Here's a 425. All right, so 355. This is pretty similar to our subject property. Remember that number. Hmm. Well, I think we're going to have to go with the WAG method on this one again. So we're going to say our ARV or after repair value is going to be 400,000. To update this, I think we are probably in the $25,000 range. And that's mostly just for painting and updating a couple of things. So our renovation budget, we're going to say is 25,000. And we're not picking anything up off of rents off of here. So we will track that in a minute. But now we're going to jump to the invest nest and analyze the cash deal. So I got it pulled up here, and this is going to tell me estimated market value. And I think they're a little high. Actually, this is saying estimated market value is higher than they're listed. And if you want to skip trace, they do include this in the price. If you want to try out the Invest Nest, I will have a link below in the description. It'll get you 50% off your first month and your first week for free. Try it out, see if you like it. I believe it's like $40 a month, but I love this site and they do include skip tracing. And so they bought it 95 for that. All right. And county wise, what county are we in? Boulder County. All right, that'll come into play in a minute. Estimated rents are 27, so that's a good sign. All right, we are gonna just call this the property address. And this is a condo. Purchase price, okay, we said our ARV or after repair value is gonna be 400,000. When we make a cash price, I always go 70% of ARV minus repairs. So 400 times 70% minus, and we said 25,000. So our offer price is going to be $255,000. Closing costs, we're going to offer to pay both sides. So that'll be about 4%. Our lender is going to charge us 2 points. Our improvement cost, we said we're 25,000, and we do want to try to roll those into our loan. 25% down payment. Loan term, I want to try to kick that to 30 years. Our rate, I believe, is about 6.75 right now for an investor. And we'll stick to this 27, but we're going to double check that over on the HUD website. And that is right here. I will have a link below for everything. that I use in the show. That will be down in the description. So for a 3 bedroom, they're saying 2820 versus 27. And there's one more I actually forgot about. Rentometer.com or Rentometer. Nominal site. They do, I think they do a great job. If you're doing just kind of onesie twosies, you can get away with free. If you um, want to look deeper, they do charge. I don't believe it's that much. And they just provide a great service. And it's super user friendly. And just like that. So the average in that area is 3,000. Our low percentage is at 27. So I think we're just going to stick with that 2710 that they're telling us for the rent. And then anything over and above is obviously going to be great. But they went within a 2 mile radius in the last 12 months to produce this data. So again, phenomenal site, and it is worth paying for. So we'll keep that the same. Property tax, it looks right. Not telling us over there. Insurance, I like to factor in $125 a month or $1,500 a year. Property management's going to cost us 10%. Our tenant's going to take care of all of our utilities, so we're not going to factor that in. Hang on, wrong button. I need to go back one. Because we do have an HOA here of 524. 524. Taxes aren't that bad, but I think that HOA is going to kill us. All right, war chest. It's never a matter of if something is going to go wrong. This is real estate. Something is definitely going to go wrong. It's never a matter of if, it's a matter of when. So I keep 15% off the top every single month and put it into a complete separate account. So when those inevitable things come up and happen, like a repair, a maintenance item, a vacancy, or a capital expenditure, it's kind of like your big ticket stuff. I have those funds already there and I don't have to dive into my profits. We will plan on a 2% appreciation. I like to raise rents 2.5% per year, and we'll plan on holding this for 10 years. And we are real estate investors. We don't pay full commissions. We'll mark that at 5. All right, let's see what these numbers look like. You were waiting to see if this thing cash flowed. I know, and we're going to show you in a second. But if you're this far in and you haven't hit that like button already, please do so now. And if you know somebody who might also find this interesting, share it with them. Thanks. Ooh, negative $200 a month. That's not fun. So if you spend about $85,000, you can lose $200 a month. Not a good deal. And as I was typing in that $800 or that $500 HOA fee, that's kind of what killed it right there. The taxes really weren't that far off, but we're offering a whole lot less than they're even asking, and this just killed it. Cap rate 5.5, DSCR not even close to 1. Cash on cash is negative, but overall return on investment after those 10 years and a 2.5% increase each year with nothing else changing. And if you've ever owned a home, whether it's an investment or your personal home where you live, insurance is always going to go up and property taxes are always going to go up. Those rates never go down. And here again is why I do not like the 1% rule. So the 1% rule says this works. This doesn't work. Here's all of our breakdown of costs. Now, also, we went really low on the rent because if we look back at Rentometer, there's an extra $500. So this would cash flow about $300 if you can get $3,000 a month for it. Keyword if. Well, at that point, honestly, you'd really just be break even. Yeah, it wouldn't change a whole lot. But yeah, you're in this thing for 10 years before you can even become, well, probably 6 or 7. You'd have to hold this for 15 years for a decent cash on cash return. It's a bummer. I like this one too. I was hoping it would work. All right. Well, we know this is not going to work, so let's jump over and do my favorite part and analyze the creative side. This is my creative calculator. You can get it off my website, christhompsonteam.com, and also the link will be down below. All right, our ARV we're thinking is 400,000. So our purchase price on the cash side was really low at 255. No button. So at 255, we were still losing 200. So I think we'll throw out, what if we throw out 400 at 0%, and then we'll go try to figure out what our PITI is, or principal, interest, taxes, and insurance. What is that? Our mortgage payment. But on this one, we're also going to factor in the plus HOA on that one. And for that, we're going to use bank rate. So I want 400,000, and I only want to put 5% down at a 0% rate. And our zip out there is 80301. HOA was 524 a month. Property tax is 220. Insurance 125. All right. It's still a negative cash flow. All right, so before we go any deeper, our principal, interest, taxes, and insurance at a 0% interest still is a negative cash flow deal. So what if we just change this number to a nice 3 with 5? And let's try a 2% rate. Ouch. Didn't change it either. At 300 at 0%, it almost kind of works. This is not going to be a good deal. All right, so 300, 5% down, 0% interest, taxes, insurance, and HOA. Our payment is 1661. Let's go plug that in. 1661. And our potential rents, we said were only 1710. This thing's going to be negative as well. This isn't even worse. That's a 2% rate. 1 on 300. Wow. It said 15 to the seller. Let's try 500 to the agent because they didn't get anything done. Assignment fee, we're not working with a wholesaler, so that doesn't matter. Closing cost is that same 4%. Renos, we said 25,000. 2 months of carrying is just 2 months of that PITI or mortgage payment. And a good TC or transaction coordinator will cost you about $1,500. Well, it looks like we struck out today in Boulder, Colorado. Overall, the condo fee at over $500 a month is really what killed this thing, especially on the cash deal, and that did not help us on the whatchamacallit, the creative deal. There we go. Sorry. So next week we will try again to find a good cash flowing deal, but Boulder, Colorado, this is not a good one for us, at least. Maybe you can make it work, maybe you can't. If you adjust a couple of different things, or honestly find something without an HOA, you could probably make those numbers work. But I appreciate you tuning in this week to the weekly deal analysis in the corner barn. I am Chris Thompson, that bearded guy, the creative guy. We will see you next week.